What's up, guys? I'm Nobody Special, and higher energy prices in Europe are starting to cause serious problems in other industries, and it could be forecasting a big jump in food prices next year. You ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm Nobody Special. And what is going on in global energy markets? Oh my goodness, the price of natural gas is up 12% one day. It's down 10% the next day, up 5, down 6, all over the place. And then Europe is worried about how they're going to heat their homes this winter. And oh, here comes Vladimir Putin to the rescue, turning up the flow in the pipelines, which great if your energy policy means gambling on warm weather and Vladimir Putin's mood swings. Good luck to you, folks. So what is happening in these energy markets? And it's starting to cause problems elsewhere, and it means it's going to get more expensive to eat next year. And you'll see that there's some trends that started a long time ago, but that are going to pick up some steam and are going to cause real problems for food prices in the coming months. But guys, before we get too far into that, I have to ask you, please click on that big, beautiful like button, subscribe to my channel, and hit that notification bell. It helps me to keep this channel growing. It really helps me out, and I would be forever in your debt. Now with that, let's shrink my big fat melon of a head and let's get into this crazy story about energy markets. And shout out to Rafi Farber, who first pointed out this article to me in his video that he did yesterday. Rafi, I'll put a link to Rafi's channel in the description here. I've seen him in the Wall Street Silver group a lot, and he's done some really good DD. And he's also got a YouTube channel and a newsletter. I highly recommend him. He's a smart guy, and he makes a lot of good points, and his last couple of videos have really been on point about inflation in energy markets and some of the ripples it's causing in the global economy. But I want to point out this article here. European industry is being pushed closer to the breaking point as the region's energy crisis worsens by the day. Let's zoom in a little bit, make Mrs. Special happy. Power and gas prices are hitting fresh records almost daily, and some energy-intensive companies have temporarily shut operations because they're becoming too expensive to run. As winter approaches and Europeans start to turn on their heaters, the squeeze will intensify, pushing more executives into tough decisions about keeping plants open. Folks, this sounds an awful lot like stagflation, like the 1970s. If you're not familiar with the term stagflation, stagflation means a period of low economic growth or even economic contraction combined with a big rise in prices or inflation. Now, typically you would think a rise in prices means more economic activity, which would be good for the economy. But no, with stagflation, you have the worst of both worlds. Stagflation is economic purgatory. It's where prices are going up, but economic activity is going down. And that is exactly what we're seeing here in Europe. This is your good old-fashioned stagflation, folks, where higher energy prices is forcing a reduction in productivity and production. That means less economic activity. So they are stagflating over in Europe over these energy prices right now. But reading on, I want to get into this point, and this is really what made me worry about this article. Ammonia producer SKW, a bunch of stuff I can't pronounce, is among those that's been forced into drastic steps. The German company, which burns through about 640 gigawatt hours of natural gas each year, equivalent to about 50,000 households, said Tuesday it will cut production by 20% to offset rising gas prices. It doesn't make sense to make ammonia at these price levels, said Chief Executive, something I can't pronounce. A complete production stop looms if the government doesn't act. All right, so ammonia. All right. At first glance, it's like, okay, higher energy prices, and this ammonia factory has to shut down, right? Well, how much ammonia do you really use on a daily basis, right? Maybe you have some in a bottle under your sink. Maybe you use it to clean things. Who's really worried about your ammonia, right? Hard stop right there. Everybody uses ammonia. You use ammonia even if you don't use it directly, because ammonia is the main ingredient in fertilizer. And you better believe you use fertilizer. All right, whether you put Miracle-Gro in your tomato plants in the spring or not, you eat food that is grown on a farm that uses fertilizer. And boy, if you look, some of these trends in fertilizer are a little worrisome. Shrinking me again, I want to move over here. Now, I did a little bit of research into fertilizer price trends for this article, and I came up with some stuff I had to look up. Here in this article, they're talking about DAP fertilizer tops $700 per ton for the first time in a decade. Now, DAP stands for diammonium phosphate. We're not going to worry too much about the chemistry here, but it's a popular form of fertilizer that is very high in nitrogen content. Okay, and I just want to highlight a couple of things in this article here. We're going to zoom in a little bit. Potash prices rose significantly compared to last month, while the average retail price of DAP reached a 10-year high, according to prices tracked by DTN for the second week of September 2021. This article is dated a few weeks ago, so this fertilizer price trend does not factor in the sudden spike in European gas prices. Okay, the remaining 7 fertilizers were all just slightly higher. DTN designates a significant price increase of 5% or more. So I want to point to this chart here. Okay, let's make sure you guys can see. Okay, we got to shrink me a little more, get me out of the way here. Average weekly retail DAP prices. All right. Now, these 3 charts, you've got the purple line is your 2019 price, right? Prices were trending down a little bit in 2019. Then your green line here is your 2020 price, all right? There's a big drop at the beginning of 2020 with the lockdown like we saw with everything else. But look in about August of last year, you'll notice fertilizer prices started climbing. They started climbing and they kept climbing. And now the red line is 2021 prices. And you'll see that the curve steepened a little bit and then boom, big step up. And that this trend has continued all through the spring, all through the summer, and it's flattened out a little bit recently. But with this big jump in energy prices and now with Europeans reducing their ammonia production, you better believe this chart is going to steepen. And fertilizer is a direct input to your food prices, folks. This is the stuff that you eat. This is showing you that the stuff that goes into the stuff that you eat is getting more expensive. All right, and combine that with the farmer has to pay more to power his tractors and his equipment to produce that food. You better believe food is getting more expensive. You better believe it. All right, now one data point alone is not a trend make. All right, so I went looking for some other kinds of fertilizer. What else might be out there? And then I found this MAP fertilizer price hits $800 per ton as retail price spikes. Now this one is dated yesterday, and this is talking about MAP fertilizer rates. Now that's monoammonium phosphate, or slightly lower nitrogen content fertilizer. All right, but this hits $800 per ton. Now you're going to see some similar trends here. They're talking about potash prices went up and urea is getting more expensive. But again, I want to show you this chart that shows the price trend over the last 3 years. And again, you can see starting in about August on the green line, August of last year, we saw fertilizer prices start to climb and they started to pick up steam. And then that chart, now picking up on the red line in January of 2021, it went parabolic in the early winter or late winter, early spring, leveled off, but it still continued to rise. And I see this chart about to pick up steam. This is the reduction in ammonia production. This is the ingredients in fertilizer getting more expensive. So this chart, though, does not reflect the most recent realities and these recent develops in Europe. And I want to point to this next article here. Perfect storm causes fertilizer price spikes. This is in Grain News. All right. Most of us are in a wait and see position. I just want to read a little bit off of this article. All right. Fertilizer prices have increased over the past year, but could be headed even higher as a recent confluence of events has caused a shortage. A shortage. Weird how we keep getting shortages of the most seemingly random things, the effects of which may affect producers past the new year. Particularly in the last few weeks, there have been a number of supply events which have really added up to tightening the market significantly, said Chris Lawson, New York-based head of fertilizers for the CRU Group. Increased demand by producers, combined with higher prices for urea, phosphates, and potash, have already caused the price of fertilizers to rise. Then Hurricane Ida shuttered nitrogen plants along the U.S. Gulf Coast, and a rally in European natural gas prices earlier this month forced Yara International and CF Industries to curtail and even shut down production at their nitrogen plants across the Atlantic. All right, now, I want to point out some things here. They're talking about a reduction in nitrogen plants and potash prices and urea prices going up, right? Other fertilizer ingredients going up, and that Hurricane Ida had caused some disruptions here in the States. This is not talking about this most recent article that Rafi Farber pointed out about the ammonia producers in Europe cutting production by 20% or even threatening a shutdown altogether. All right, so what we've got is this pre-existing trend of fertilizer prices getting more expensive, and then we've got recent weather events in the U.S. have cut production here in the States. Now you've got this energy spike going on in Europe, causing a reduction in the production of ammonia over in Europe. Combine that with, we know about the energy crisis going on in China and how China's industrial production is cutting down. So globally, you've got these energy-intensive industries like fertilizer production, like the ingredients in fertilizer, that are all being affected by these higher energy prices. All right. Now, this doesn't mean food prices go up today. This means tomorrow's food is going to be more expensive. All right. So this is an opportunity to front run this trend. Now, I just want to preface this by saying, here's my butt covering statement. I'm not a financial advisor. Don't touch a trade based on what you hear from me. Do your own research, your own DD, arrive at a decision that's right for you based on your unique situation, okay? And I also want to put in the disclaimer that says I have not touched this particular trade just yet, all right? I'm just throwing these out here. I am still in cash-raising mode individually here right now because I don't really know what's going to happen in the coming months, and I want to be positioned to make moves, make changes when that happens. So I'm still raising cash. However, if you feel compelled to invest this trend, or if you're interested in ideas, here is one avenue that I have considered, and that is DBA, ticker symbol, the Invesco Agriculture Fund. Let me zoom out a little bit. Okay. Now, this is an ETF that really tracks food commodity prices. Okay. And I just want to scroll down a little over to the side here on Yahoo Finance, and it shows you what the top holdings are. All right. The top holdings, 24%, are in this short-term government and agency. That's basically cash and treasuries, 24%. All right, that's their biggest position. But they've also coffee futures, corn futures, sugar futures, soybean futures. There's UST bills, more UST bills. So a lot of cash and treasuries. I found that a little odd for this fund. But you've also see live cattle and lean hogs here. So this is a fund that gives you exposure to both your grains and then other things like sugar and soybeans, and then also your meat prices. So this is a pretty well-diversified commodity, well-diversified agriculture commodity ETF. So this gives you a nice spread across a whole slew of farm subsidies. So you're somewhat insulated from a price crash in any one particular commodity, right? This is just a way to play the averages. So I like that about this. Some things I want to point out here. Let me adjust my chart here. Let's set this to a 1-year chart. Okay. Now let's move my big fat melon and make sure you can see. All right. So looking on a 1-year chart, by now you've probably noticed, look at this horizontal line here, right around 1940, 1950, right? So this has been trending up for the better part of the year. It's actually up about 20% already year to date, which makes sense. Most of the agricultural commodities, we've had a lot of food inflation this year, right? It's been an inflation story. But look at how many times we have come up against this 1940, 1950 level in this fund, only to fail lower and fall back down, in several cases below the 50-day line. Now, we're right here, right about this 1940, 1950 level in DBA. So were I interested in this trade, which, again, I want to tell you, I'm still raising cash, so I have not made this trade, but I am going to keep an eye on this. I would be looking for a breakout above this 1940, say 1950, just to give yourself a little margin. I would look for a breakout above 1950 and then a back test down to retest that 1950 level, a bounce off of that level before I made this investment. All right, because this is in this sideways channel with an ascending level of support. I would wait to see it break to the upside and then come back down and retest before I got into this trade. And again, I just want to say I'm not a financial advisor. Don't touch this trade based on what you hear from me. And I also have to say I have not bought this one, and I probably won't buy this one anytime soon because I'm still raising cash. But this is a nice diversified way to invest in the increase in energy prices and the increase in agriculture commodity prices. So I found that one interesting. And when you think about it, folks, with the price of energy going up, with the price of fertilizer going up, with the price of labor going up, it's going to get more expensive to eat. Right? Food is going to get more expensive. So this is also a good time to say, hopefully you've got a little bit of food set aside just for an emergency. You know, maybe a big bag of rice or a big bag of dried beans or something on the side, right? A little bit of food security is not a bad idea. I'm willing to bet if you follow this channel, you've already got a little something like that set aside anyway. If you don't, it's not a bad time to think about it, folks, because it is going to get more expensive to eat in the future. I don't know how much more expensive it's going to get, but if these energy prices and these fertilizer prices are any indicator, it's going to get a lot more expensive to eat in the not too distant future. Anyways, folks, that's all I got for you. I want to thank you for your time. Thank you for watching this video. Don't forget, hit that big like button. Subscribe to my channel, hit that notification bell. It really helps me out. It helps me to keep this channel growing, and I'd be forever in your debt. Folks, until next time, live small and dream big.